Thanks for clicking. The Canadian Real Estate Association released its national sales data for the month of April yesterday, which, as expected, showed a major increase in prices nationwide. And with prices continuing to shoot upward, some, including Doug Porter from the Bank of Montreal, are questioning whether or not the Bank of Canada has raised interest rates high enough. And this view is going to no doubt be amplified by the release of Canada's inflation data this morning, which came in at 4.4%, much hotter than expected. Indeed, a real estate market that is heating back up and inflation data coming in much hotter than expected is definitely going to be unwelcome news for the Bank of Canada, which paused on interest rate hikes only a few months ago. So what I want to do today is go over Canada's real estate data for the month of April, discuss the inflation data that just came out today, look at some of the implications for the Bank of Canada's rate announcement coming up in just a few weeks on June 7th, and then discuss what to look for next. Speaking of that next rate hike, we'll obviously have an update out on any Bank of Canada announcements on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into this real estate data. Onto the real estate data. First up, the benchmark price. The benchmark price, if you'll remember, that's the price of a home, which represents the most popular set of features. The benchmark price in March was sitting at $709,000, and that jumped up in April to $723,900. So we have an almost $15,000 increase in the home with the most popular set of features. And the average price of a home in Canada also shot up in April. In March, the average price was sitting at $686,400, and that shot up by nearly $30,000 to $716,000. So we have a $30,000 increase in the average price and about a $15,000 increase in the benchmark price as well. And this all makes sense when we look at the lack of listings coming to market. While new listings were up 1.6% from the month prior, they are still sitting at a 20-year low. So, very similar to last month and in line with what we've been seeing from the local boards, a lack of listings combined with pent-up demand is leading to higher prices. And CREA economist Sean Cathcart, who we've talked about at great length on this channel, noted that with interest rates at the top and prices at the bottom, buyers are jumping off of the sidelines.
With interest rates now at the top, home prices finding a bottom right around the Easter weekend, which also often serves as a starting point for the busy spring market anyway. We did see a lot of buyers become active in the market in the second half of April.
Yet with the inflation data that was released just this morning, just one day after the release from the CREA, it's not clear as of yet that interest rates are at the top, or for that matter, that real estate prices are at their bottom.
You better pay up.
Indeed, Stats Canada's CPI release came out this morning at 4.4%, up from the 4.1% that had been predicted by economists. And this was the first acceleration in Canada's inflation rate in 10 months. And definitely not in the direction that Bank of Canada Governor Tiff Macklem had been hoping.
Why do you do this to me?
Higher mortgage costs and higher rent costs were the biggest contributors to the increase in the inflation data for April. With that said, the pace of food price increases did slow, and measures of core inflation, inflation which strip out food and gas, also continued to slow down from March. Bond yields popped up on the release of the data as traders increased their bets that the Bank of Canada would be raising rates. And with good reason. As this data shows, there are a number of indicators working against the Bank of Canada's pause right now. The benchmark price in Canada is up about $20,000 from February's low of $704,000, and the average price of a home in Canada is up about $100,000 from January's low of $612,000. Robert Kavchik, senior economist at the Bank of Montreal, said that the bank is not going to be thrilled with seeing the real estate market ramp back up again, and this will put upward pressure on our shelter costs in the latter half of this year. Further, Canada's jobs market is proving much more resilient than many had anticipated. Definitely more resilient than had been anticipated by the Bank of Canada. So, we have the real estate market heating back up again with the average and the benchmark prices all up. We have the inflation data coming in much hotter than expected, re-accelerating for the first time since June of 2022. And we have a job market which the Bank of Canada has been trying to actively hurt, which is proving much more resilient. Given the real estate market that is heating back up and the inflation data coming in hotter than expected, I think the Bank of Canada does have the cover that it needs if it wants to raise rates in June. If it wants to reverse course on the pause that began in March, which, as the Bank of Canada minutes already demonstrate, it was close to doing at its last announcement. I don't think we're going back to multiple consecutive 50 basis point rate hikes anytime soon, but I don't think that a 25 basis point rate hike is out of the question at the June announcement. The bank is going to want to send the signal to the markets, to the economy, to prospective homebuyers that it will raise rates if need be. With that said, it's not clear whether or not the Bank of Canada will be raising rates at their June announcement, but we'll obviously have an update on that announcement on this channel. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.